All right, guys, we're back with another data-filled video on Bitcoin, looking at the possibility of a sell in May, go away strategy. Going to review the data on this particular strategy, going specifically into the monthly, the 6 monthly, and the annually, and how that has played out over the years, comparing that with the bear market years and the bull market years in terms of the Bitcoin cycle. And no, not the halving cycle, forget that trash. We're looking at the 4-year cycle, left and right. So I've got plenty to get through with you today. So make sure you do hit that like and subscribe button. Hope you had a fantastic weekend. We are back. We're going to do more out on location this week, but today I need to be in the office to get through the data here and check out the charts, of course. You're doing a fantastic job. Thanks again. We are beating this YouTube algorithm and YouTube audience who reviews videos with warnings and breakings and big titles. So smash up the likes. Let's go. 4,000 likes today. All right, let's kick it off, guys. The daily chart here for BTC. Basically 6 days down now. We're underneath the old or the current all-time high for the last 46 days. We're coming into our 46th day when you see this. And I don't expect that to change soon. Obviously, soon could be a week, 2 weeks. I don't think we're going to shoot to new all-time highs. If it was to happen, I don't think it'd be that sustainable. So this is where we've come from, these tops. This is my take on reviewing history, studying the past to forecast the future. I've got plenty of receipts going back to April and March at the peaks. And you can see a lot of the comments around that time when we were at that peak in March were having a go at my analysis, suggesting that the market had to continue up in light of the halving and all that sort of stuff. And obviously that hasn't been the case. However, we still have not collapsed. We've basically been churning sideways between 60 and 70K. So on the short-term review here, before we get into that data, essentially that was the peak there in around mid-March, where almost every single influencer was looking at 100 grand before halving because of the on-chain analysis, because ETFs were buying, because halving was coming up, because you name it, it had to keep doing what it was doing. And then this collapsed, well, the whole narrative collapsed, and then it came over to this point. So I'm moving this arrow here, and that was the idea. Bitcoin's going to 100 grand before the halving, and as it started to rise again, they were all calling that the low was in. Big channels talking about low was in, and the market was going to go racing up to new highs again because that's what it had done, and it didn't occur. That was the lower top, the complacency bounce. If you're familiar with the Wall Street cheat sheet, it fell again, tried again, and they came back. 100 grand before the halving, all this sort of stuff. That was early April, but that was the fake out. So we got a fake out. We looked at that $72,500 level specifically, and Bitcoin faked out above that and then came crashing down from that point again, taking out this next low. And so that basically cemented this sideways trading range for Bitcoin throughout the course of March and now April. And so April, we got 24 hours to go for the monthly close. I think will probably turn into a red month. I don't think there's too many people that would say otherwise. Again, just looking at this data here, we're in a red month. We're down about 12% on the month. And basically from that point, we had the fake out, market collapsed. We had the halving, which was, in the scheme of things, a non-event for the timing. It was a lot of hype leading into the event, and basically a month before it, we got the top. So the 14th was the top, and then the 20th. So basically 5 weeks before the halving is where the peak interest died off. Then we had another 50% rejection multiple times. So that's what we're looking at there. And then there, that was a 50%, roughly 67K, 66.5K. And now we are down from that rejection yet again, just like it rejected on the 15th of April. So now it leads us to present day, where we currently sit on this $63-ish thousand level. As I talked about in last week's videos, was going to be a critical area for Bitcoin because you saw a lot of action take place in mid-April leading into that halving, and now we find ourselves way back down to that level again. So let's kick it off from here before I get into my opinions on my own analysis later in the video. First up, what is this sell in May, go away strategy? It's a trading strategy which recommends investors close their positions in May and walk away from the markets until October. And then you have to specifically buy back the 31st of October, which is your Halloween day for the US. And that is your Halloween effect, which suggests from previous data that the market runs up into Christmas, which gives you that Christmas rally. So you've got Thanksgiving and then you've got Christmas and the market will run up from that. This year, it might continue to do that. The data suggests that it would. We've got the election coming up and then more and more money going into the system. And basically, that could happen later in the year. But let's just keep focusing on what we've got so far, where we've come from, so that we can try to forecast where we're going with this. So these were the posts there. If you want to check them out, they're on X. Link to that is in the video description. So you can check out all the receipts, the stuff that we've been talking about from those peaks, the, call it nasty comments. It got very hot and heated at that peak. Markets come down from that point and things seem like they have cooled off from there. And we've definitely now seen the cooling off on the Google trend words. Don't come at me with the old, no one's using Google to search anymore, AI BS. That's going to take a while to change, and Google is also using AI. So Google trend words are still very, very helpful. If you don't want to use them in your own analysis, go for God, don't use them. But this has been very, very helpful. And look at that peak interest came the week before the all-time high. And then the all-time high week was just under that top. So you had a lowering of interest. Google Trends, of course, people aren't searching Bitcoin as much. And we ran into that peak at the top here. So this was peak search term for Bitcoin. All-time high came the week after. And now basically the search term has absolutely died off from here. Back down to 20 on the reading here, which takes us back to previous levels that we saw after the ETF. And then all through that grind of 2023, of that 7-month accumulation range. It's not all bad news. This is not bad news at all, okay? It's fantastic for the bull market because we are getting rid of all the nonsense that came through at the peaks back in early March, and also all the nonsense that came through, just the hysteria, not necessarily nonsense of the fundamental events of the ETFs, but the hysteria. You need to get rid of that hysteria. The search term has died off. It has gone back to that same level of those periods of the grind of 2023 and also some brief periods through the ETF hype. That's just a fact. That's not my opinion. And you can see the excitement has died off. Now, I said it's not all bad news because, again, just looking specifically at the price chart, the Bitcoin price is still at the levels that it was when it had extreme hype. That was at the peaks of the search term, but the price is still in that trading range. So there's still interest, there's still holders out there, of course, but at least that the major euphoric interest has died off. And I think we'll get that back. That's my opinion, just based on what we're seeing with the support and resistance levels coming in on the chart. This is the fear and greed chart. It has been dropping off. You can see we had extreme greed in early March leading into that peak, and then the greed died out. Look at the greed. It was still extreme, but it was lower highs on the extreme greed, but higher highs on the price chart. What am I talking about? That there. There's higher highs, there's lower highs. This continued to die off. I've talked about this before being one of the least feared bull markets. We have not, the fear of the market has not dropped back into extreme fear since essentially the low of last cycle. So there's just been no fear of this bull market. Will it come? Probably. But just taking an objective look at the data, the fear and greed has not hit extreme fear throughout this entire cycle, except for the low. So basically the low point there at the FTX collapse. And then on the channel, that time, a year and a half ago, wherever that bottom was, I suggested that was the low because of the rising greed. We're leaving the extreme fear and coming up into just fear, yet the price was going lower. So people were less fearful of the market around these lows. And as it started to climb out, you saw even less fear in the market and more of a neutral stance, as you can see from the yellow and the light green in the background here, just leading into that neutral stance as the price continued to rise. If we were to see price come back down and still remain at higher lows to all of this movement, then you might see a bit of a shakeout here on the market sentiment that could drop it back into the fearful zone, which could reset the market sentiment overall. Now, looking at the weekly here, this is a 4-week red period for Bitcoin. This has signaled rallies in the past and then another move to the downside. Doesn't have to be severe. So the downside for the whole movement was 20% in that 7-month grinding, another 22%. The banking crisis, non-crisis, was 21%. All I'm getting from this is even if we were to see a rally, there might be another leg down, but it might not be extreme that many are hoping for, some sort of extreme move below 40K. The only time that we can see that occur in 2023 was the banking crisis. So you had an extreme fearful event. Lots of people bought up that low and then it broke out and took out those tops without any sort of pullback again. So if we were to get some sort of extreme cataclysmic event, maybe that could be the signal that we won't see the market rally and then put in a new low. That could be the low itself because you've got enough selling pressure to clear out the market of those sellers and then start to climb higher, just like what happened in the banking crisis. Michael has covered it pretty well on his channel as well. You can find that in the video description right here. So that's my brother doing more analysis on Bitcoin. So looking at the swings themselves, the yellow line here, the Gann swing indicator, link to this, top of the video description, you get a free 7-day trial. So after these long swings, we've seen 2 swings down in the case of 2021. We've seen 6 weeks down in the swing in the case of 2019 into 2020. But remember, that was at the earlier stages of the market. That was basically from the low, 6 months up and then 6 months down. Whereas we are a long way from that low now. We've had that 12-month period already and we're up at these high prices. So if we look back to the previous cycles, after significant moves out, there was 2 red months down. It was still within a trading range in 2016 into 2017, but you only had that 2 months down before the market was trying to recover new fresh highs, right? In the first move out, you had 3 months up and then the pause there of roughly 5 months. But in terms of red, well, you had 1 reversed, came back down for the following month and then green. So just looking at what a churn sideways looks like, the cycle before leading into that peak of November, again, several months up, then there was a pause, 1 red month, still within the trading range there. So it was about 4 months in the trading range. Went on the next move into April. There's your April top. And then again, 2 red months, but nothing overly severe for the time. And then stayed within the trading range and then worked its way out into that final peak. So in the bull markets, barring this one here, which led into that COVID collapse, you can see anything from about 1 to 2 months of red in a row. So this could be the final red, and maybe May you'd see some downside and then a higher close. So that's also a possibility. But at the time, it might feel like May is just, it's all over and it's only going to close red. What we've seen in the past, 1 to 2 months on an average would be your red periods coming up. So we've looked at the swings, green months in a row, red months in a row within a bull market after a swing, and also the turns. So we got so far a March top, and like we've covered for previous years, you've got June's, March, April, June. So it seems like a pretty typical period for the market to turn in. And then if we add that to the correction, 1 to 2 months, maybe we see the low in April, maybe we see the low in May. Well, it would be typically doing what it's done in the past. 1 to 2 months down, it would churn sideways for another couple of months and then start to work its way higher. Obviously, we don't have that data for the next 4 months. We're just trying to understand what's happened in the past and then continue to watch the signals as they play out day to day, week to week, to see if we do get those higher lows forming. Now, onto the monthly analysis here, just looking at what's happened in the past. May, using every single month of May's, it's roughly 54% chance of a green month. If we take out the bearish years, so the bear years, 22, 18, 14, 2014, well, then it gives us a 60% chance of a green month. And if we just look at what's happened with April's, if April was red, May has been red, and that was in 2015, in 2021. Let's see what happens in 2024, of course. If April was green, well, that doesn't typically say that May has to also be green. You've got two occasions there in 2023 and 2013 where April was green and May was red. So I think it's important just to watch what the chart is doing next. I'm not paying as much attention to the month to month as opposed to, say, the 6 monthly chart here and also the swings themselves. So the data for sell in May, go away, and then buy back on the 31st of October has a 69% hit rate for the entire history of Bitcoin. Now, if you take out the bear market years of 2014, 2018, and 2022, an even better hit rate, 90%. So if you get out of those years every sort of 4 years where the market's basically straight down, that would save you a lot of heartache. And the biggest losses themselves, 24, 31, and 45%, because the one in 2011 was only 8%. Now, if we look forward the 12 months of May, so May to April, you got a 69% hit rate. If you were just to buy on the 1st and hold it until the 30th of April next year, 7 out of 10 times you're going to end up green. So it's probably not the best strategy to do that for the 12 months, especially if it's a non-bear market year, which I don't think we're in one this year. But again, you're going to have to decide that for yourself. That would lead you to a 90% hit rate of green. So a pretty decent 12 months ahead for May through to April of 2025. So it's saying that the prices would be higher. Just looking at this, 2021 was the obvious example that it wasn't. So from May into April of 2022, the market was 35% lower. So pretty big hit there. As for the 4-year cycle, low to low, not this halving cycle BS. As soon as you can scrap that from your life, I think you're going to do a lot better. That's the stuff that the YouTube, Bitcoin, crypto influencers talk about. Scrap it from your life. So low to low, because this can be used on any market. You're looking at Hurst cycles. That's what this is, the left and the right translated cycle. Now, previous cycle, 2019, a lot thought that 2019 was going to be a left translated cycle because it ran up so hard, paused for a long time, consolidated, and then we went into a right. So we got a peak in the second half of the 4 years. That is all that means, right? It was a strong bull market. Case closed, market ran down for 12 months, and then here we are again. So again, 2 months ago, we saw a lot of people suggesting that we're going to see a left translated cycle. This was going to shoot to 100K, 150K. It might have been over in March. It might have been over in April, and that was it. But I still don't think that that is the case, especially if we get this grinding effect over the next month, maybe 2 or 3 months from here. Just looking at the previous cycles, you can see we had 5 months, 5 months, 5 months, 4 months in a trading range. There's going to be a lot of emotions up and down, but by the time we break out of those tops, it could be June, it could be July, it could be August, and that would then lead to the possibility of the market running up into this next top, which could happen sometime late quarter four of 2024 or quarter 1, 2025. We have to keep going with the chart. For all we know, it could grind out again and then keep pushing higher till the end of 2025. So I personally would not put a label on this to say that it must be a left or it must be a right, because by the time you get to that stage, if conditions have changed, it's important to be able to be flexible and get out of a position, or be flexible and remain with the trend as it continues higher. So that's a look at the 4-year cycle there. This grinding out at the moment, whether it lasts a month, 3 months, is looking like a very, very healthy thing for Bitcoin to then push higher for this next leg to the upside. Just looking at the breakouts of the 50% levels here. So we've got the 50% of the entire bear market range. Once it breaks out, closes above that level. In the past, we've seen approximately 13 months to the all-time high, 12 months to the all-time high, 10 months to the all-time high. So what does that look like from the breakout bar, which was February, 10 months? So using the shortest period here, that would take us out to about December of 24. So that's where I'm getting that end of 24 date from. And if we were to go something like 13 months from the all-time high, from that breakout of the 50% to the all-time high, that'll take us to about March of 25. So I'm keeping the options open there of that period of quarter 4 to quarter 1, coming up end of 24 or early 25, and then reassessing to see where the market's at. If this thing is ridiculously crazy like it was at the peak here and everyone's thinking it's going to go to 500K or something ridiculous, then maybe it would be time for a bit of a cool off. And then you would see whether the swings start to break down. That would be a very, very big signal that the masses have got it wrong again, and you're probably going to see further downside. In terms of prices, I just want to have a quick look here, something fun to play with. Looking at the total range now. So I'm not wedded to this whatsoever. We're looking at the entire range of the previous bull market projected off the current cycle low, so the current bear market low of November 2020. 50% was at 48.5K, and we saw some resistance there on the ETF news as the market ran up into January. There was a pullback, and now we're seeing it break through the 50%. So this is what we do on the short-term basis, but on a macro scale here, using yearly moves in the market. 100% gets us to 81,500. So we're not there yet. We'll have to see how it hits and what type of reaction there is at 81, or does it slice through? And then on to 150% would take it out to about $114,000. Now a doubling of the entire move projected off this low at 15K would take the market to about 147. So as a rough guide, something like 100 to 150K could be a reasonable price target, but with a big disclaimer, how is it going to respond to those priced resistance levels in the $80,000? That is the disclaimer on these moves to get to 100 to 150. I know it is way under what a lot of people in the Bitcoin space look at, but I like to keep it a little bit more sensible and not go off the deep end with $1 million Bitcoin calls. That could be many cycles away. I don't expect the $1 million Bitcoin to be in this cycle. And I'm happy to be proven wrong. Of course, I think many people would be very happy to be proven wrong if Bitcoin can get to $1 million. But that aside, I'm interested to see how it reacts to 80 grand sometime later this year, probably the second half of the year. And then how does it react in that 100 to 150K? And that's where I could start to look to get out of more positions. So the end of this has been mostly my thoughts on where the market would go, what I would do, and what happens at those points. The data specific stuff we've covered there, looking at the monthly returns going across 6 month and 12 months. And I think I'm going to leave the altcoins to the next video. Plenty of time to get through this. Has had some 50% rejections here. And of course, the volume is still dying off. But overall, I hope that has helped you for May. May hasn't given too many great big signals that it's going to be the month that Bitcoin then pushes to a new fresh all-time high, just based on what we can see here. However, it doesn't seem like the market is over and that this is a good 6 months to sell in May and go away, just based on what we have seen in the years that are not bear market years. And essentially with the price where it's at, with the rejection and the potential consolidation lasting potentially 2, 3, 5 months from the peak of March, that would suggest that the period in the second half of the year is probably going to be higher than where it currently is right now. So if May opens at 62 or 63,000, what the data has suggested is that we're probably going to be higher than that come October, when the rule says to buy back for the Halloween effect. Of course, I could be wrong. I'm just running off the data here. I'm not willing to sell it all up and then come back in October. The call is entirely up to you. Even if we were to see a pullback, that to me would be the signal to be buying up that dip and then running this thing later into 24 and potentially, hopefully, into 2025. Like and subscribe. We are crushing it, beating the YouTube algorithm and the YouTube audiences. 4,000 likes. I'll see you guys back for another video, potentially out on location again, out at the beach. Cheers again, guys. I'll see you at the next one. Take care and peace out.